Okay, Paul, we still have a few people to join, but I think we should make a start.
Hello and welcome. My name is Paul Boateng, and I'm privileged to be moderating today's session. It's part, as you know, of the Africa Agri-Tech Development Forum, and our focus today is on financing the future of off-farm innovation. The key aspect of this particular forum, what makes it different from so many others, is that it's all about shifting the dial. It's about making a difference through hearing the range of voices that we will hear today and that we've heard throughout this series, focused on meaningful collaboration, and importantly, through that collaboration, actually taking agricultural development technology in Africa to the next step. We're blessed today with a stellar cast in terms of our presenters. But the context is one that requires all of us, and all of you as participants are already making a difference out there. But the context is one that requires all of us to be making a difference now as a matter of urgency as we grapple with a global pandemic. I mean, we all knew before the pandemic the challenges that we were facing: historically low agricultural yields, growing water scarcity as a result of climate change, still real challenges in terms of bank lending going to the agri sector. What's still less than 3% of total bank lending, despite the fact that the sector employs nearly 70% of our population in Africa and generates almost 40% of GDP. All of that within a context in which, yes, it's more and more challenging to get young people onto the farms, but there are also issues around getting young people to engage in agribusiness itself. So some real challenges, but there's some good news too, isn't there? One, the incredible richness of our soils in Africa, the fact that we are the largest depository of uncultivated arable land in the world, the ingenuity and resilience of our peoples. And we've seen that in the course of the pandemic. We've seen people taking stock, looking and reflecting on better ways to tackle the challenges that we know and I've just outlined, and importantly, engaging with the whole policy reform and delivery agenda. So there's some really good stuff out there, and we're all part of that and part of taking African agribusiness and agriculture to the next level. So on with the show. This is a participatory event. So our speakers are going to be very disciplined in terms of their timing in order to give you as participants the maximum opportunity to interact with them. We're beginning with Hilary Miller-Wise, who is the Regional Director of Bolt Food. Now, Bolt, as you know, are a tech unicorn and one of the fastest growing European companies in this sector. And we're so glad to have you, Hilary. You bring a real depth of knowledge about the sector, but also an enthusiasm and passion to the work, which has contributed enormously to your being recognized for the top ag tech leader that you are. So over to you.
Paul, very sorry, Paul. I'm as keen to hear from Hilary as you are, but I was hoping to do a very quick introduction myself first and then go to
Hilary,
if that's okay. Sorry,
well,
Hilary.
It's always good to hear from you, Nick. So over to you, and then we'll come to Hilary.
Sorry, I'll keep it particularly brief today, but I just wanted to add before we start and hear from our speakers. Well, first of all, say thank you for taking the time to join us this afternoon. And there are a few things for me to very quickly introduce. First of all, myself, as Paul mentioned, I'm Nick, the founder and director of Bobab. Hopefully you've all figured out what we are now, but we're an event streaming and peer-to-peer networking platform dedicated to promoting African science, tech, and innovation. And I always like to start these events just by stressing our goal, which we hope or we think is a simple one. It's to accelerate scientific and technological innovation in Africa. And we're doing that firstly by building the largest Pan-African community of science, tech and business professionals in the world. And second, by working with a really diverse range of clients and supporters to design and deliver events and campaigns that explore complex challenges, identify solutions, but crucially as well, promote cutting edge innovation from Africa and around the world. One such campaign, obviously, is the Africa Agri-Tech Development Forum, the motivation for which came about because despite the rhetoric, policies and strategic framework, the path to scale is still very difficult for lots of people on the continent. And I'm delighted to say that as of this week, we have received support from Small Foundation, a foundation based in Ireland, that on the back of the good work we've done so far, we'll be able to continue with the Africa Agri-Tech Development Forum into next year. So keep your eyes peeled for future events where we've got lots more interesting issues to explore. And back to the focus of this event. As Paul mentioned, the premise of today is to bring a group of diverse experts together to explore where and how agri-tech innovation is helping or can help ignite a much needed agricultural revolution across the continent. And I think we can all agree a revolution is sorely needed because, you know, despite sub-Saharan Africa registering the fastest rate of agricultural production growth in the world since 2000, as stated in a recent Africa Agricultural Status Report at the Africa Green Revolution Forum a couple of weeks ago. According to the UN's FAO, 20% of Africa's population is undernourished, with African countries spending more than 5 billion a year on food imports, and 48 countries globally with serious or alarming levels of hunger, 34 are on the continent. And what's more, as Paul's already alluded to, both public and private investment continues to fall far below what's needed, with government's agricultural budgets actually declining over the last 2 decades from around 3.6% in 2001 to 2.3% in 2017. And of course, goes without saying, things have been made a lot worse by the pandemic, with the World Bank warning that as much as 7% could be wiped out of production. Now, I don't say this to paint an overly negative picture, because of course there are lots and lots of things to be positive about, but it's clear that against the backdrop of rapidly increasing food production needs, rising youth unemployment, increased urbanization and climate change, frankly, a radically different approach will be needed to develop and support promising agri-innovation. And that's why we're here today. So we've got a fantastic panel of speakers who are going to help us explore where and how we finance the future of off-farm innovation across Africa. And one very final quick point, as most of you will know, the format of today's event, we start with a webinar, then we go into the roundtables. Normally we have at least 2 of those discussions, but unfortunately one of our roundtable leaders has had to drop out at the last minute due to a family commitment. We wish them well, but today we'll have one roundtable session, which is going to be led by our friends at Farm Crowdy. Don't worry about that bit now, I'll explain more about it later. Thanks again. Paul, over to you, and Hilary, I'm looking forward to hearing your presentation. Thank you.
Well, thank you, Nick, and thank you for setting the scene so admirably. And congratulations on the partnership with the Small Foundation, a well-earned recognition of the contribution that you and the team at Bobab have made to the field to date. So without further ado, over to you, Hilary. Far away. Over to you, Hilary. Far away. Hilary?
Can you hear me?
You froze on my screen,
Yes,
but I'm sure you'll. Now we can. Great.
Okay, apologies. Great, thank you so much. And thank you to Nick and to everyone for inviting me. I should say that my presentation is intended to probably raise more questions than it answers. And that's intentional to try to stimulate a conversation around approaches that we can take to address this very important topic. So allow me to present my screen. So the first thing that I wanted to focus on is, one of the things that we know in the agriculture sector, sorry, I think it's still loading. Are you able to see it?
It's loading.
Okay, in the interest of time, there we go, great. So one of the things I wanted to focus on was,
Sorry,
we do
Hillary,
need.
could you reshare your screen, please? It's not.
Apologies. Third time's a charm.
Yep. I think you probably missed the opening shot. It says, in sub-Saharan Africa, there's a need to revitalize rural communities.
No, we're on the right spot. Good. So one of the things I wanted to focus on is and Nick referenced this a bit, is that there is a real need to revitalize rural communities. Certainly agriculture and increasing productivity, but the focus of the conversation today is off-farm enterprise. And I wanted to take the angle of one of the trends that we know that's happening in rural markets, which is that the population of farmers is aging, right? Across Africa or globally, it's 60 years old. Young people, as we know in many markets, are not as interested in farming. And many of them are migrating to the cities. So you can see the graph on the right, that just gives a view of South Africa and specifically then Johannesburg. So you have this huge growth in the urban population and a decline in rural population. So one of the questions I think when we're talking about enterprises, rural enterprises, is how do we make it attractive for people to stay in their community and to build businesses in their community? And especially, I think there's a real opportunity here with youth. If we're talking about off-farm businesses, if we can engage youth in businesses that are related to farming and not necessarily the agriculture themselves, we might be able to create opportunities for income generation and to kind of stem this tide of huge rural to urban migration. Sorry, next slide. Let's see if I can get there. There. Okay. So the off-farm enterprises do, I think, hold a lot of potential. But if we look at the performance of many of them historically, for certain types of enterprises, the performance has not been great. We know that many of them are informal, and businesses that are owned particularly by younger people, women, and those that are quite rural, so a farther distance from the cities, tend to perform worse. We also know that in many cases, these businesses are what we would refer to as necessity enterprises, right? It's out of necessity that this business was started, as opposed to seeing a market opportunity and really trying to then grow the business and scale it. Something else that we know is that those, and this is not shocking, those who are better educated and have access to credit tend to do better, right? So we know that human and physical capital matters. Finally, the main reason that these businesses tend to fail is obviously lack of profitability, but lack of financing. So the inability to invest in the business to be able to sustain and grow it. So what is the opportunity here with these businesses? There was a study that was done recently of 60 emerging markets and found that there are about 200 million micro, small, medium enterprises, both rural and urban, that are financially excluded. And the estimate was that if we could get them financing, we could generate about $200 billion in incremental revenue. If we look just at sub-Saharan Africa, about 40% of rural households, it's sort of the best data that I've seen, operate a non-farm enterprise. That is about 53 million people. The challenge is that, as we know, many of them don't have access to finance. And there was a very good study by the World Bank in Tanzania that showed that most of these businesses haven't even tried to get a loan. And there are a lot of reasons that we know why that would be, but they're not even attempting to get access to the finance that they would need in order to grow the business. Most of the capital comes from their own savings or family and friends, and as we say, and other fools. And those who do not start businesses, lack of capital is one of the major reasons that they don't. The reason why, and the sort of hurdles for access to financing are very similar to what we see with farmers, right? Collateral requirements that the businesses can't meet. Very difficult to determine the capacity of these businesses to borrow because the data is quite scarce on them. Many of the banks and financial service providers don't have products that are designed for this customer base. As we know, it's very costly to reach them in the same way that the transaction costs are very high to reach smallholder farmers. And then finally, in a lot of countries, legislation and regulation is not in place to really support the growth of this sector. So I won't go through this in detail, but here are a few demand side opportunities or potential solutions that I think that we can talk about to unlock more financial services for this customer base. Things like having tiered KYC. If I'm a small business and I'm a woman entrepreneur and I don't have collateral and my transaction volumes are small, why should I have the same KYC requirement as a huge ag processing company or exporter, et cetera? There should be more flexibility based on the risk profile of the customer. A second one that I'll point out is agency banking. Even in countries where there is agency banking regulation, a lot of financial service providers don't offer it because they're quite risk averse and they're reluctant to change from their traditional model. Agency banking is a critical way to reduce transaction costs to reach this customer base. And my last slide, I'll just talk about the potential quickly of digital financial services to reach this sector. We know that digital financial services can significantly reduce high transaction costs. The best estimates I've seen say that customer acquisition costs can be up to 15% less than in traditional banks. That is huge in terms of cost savings. Secondly, managing risks, using data on smartphones, if the business owners have smartphones, for the purpose of credit scoring as an alternative means of risk assessment. And of course, to gather data, to conduct the business intelligence, to design and deliver appropriate products. McKinsey recently estimated that if the use of DFS could actually increase GDP globally by 3.7 trillion, or about 6%. Massive opportunity here that I think we're only just beginning to realize. However, there are challenges related to digital financial services. One being that the cost of a mobile phone can be exorbitant and can vary dramatically from country to country. It can vary as much as 50 times. In sub-Saharan Africa, women are 15% less likely to own a phone. So we're automatically, if we're using digital financial services, we're automatically cutting out a whole sector of potential businesses that can't access these services. And of course, we have challenges around illiteracy rates that obviously are much higher in rural markets than in urban. So in sum, I think there's a tremendous opportunity. We need to look at both demand side and supply side solutions to get us there. There isn't a silver bullet. Leveraging digital, I think, is one way that we can achieve it, but it's not without its challenges, but they are surmountable if we can coordinate, I think, as private sector, as NGO, and as government. With that, I thank you.
Thank you very much indeed for that, Hilary, and for outlining so effectively both the challenges, but also, and importantly, the opportunities, and those things we need actually to deliver on in order to make a difference. We now turn to Akindele Phillips, who brings a passion to entrepreneurship. He's the Chief Executive Officer and co-founder of Farm Crowdy. And Farm Crowdy, as they've developed as now a global agri-tech company, have focused on helping stakeholders in the food value chain maximize their output and increase their profits with technology, and use what's really a a game-changing platform, leveraging technology and connecting what now over 420,000 food value chain participants into a network that's actually helping them access finance, reduce the cost of production, and open up not just the opportunity, but the reality for them of better harvest yields and greater access to markets. So we look forward enormously, Akindele, to hearing from you. Over to you.
Thank you so much, Paul. Hilary, thank you. You created a good foundation for me. Then focusing on South Africa. Now I'll be taking us to a little bit around West Africa and East Africa by sharing the Farm Crowdy story. I hope everyone can hear me clearly.
We can. We can, very clearly.
Thank you. I also I wouldn't want to assume the literature around off-farming is well understood. So I'll also explain in context, and obviously in context of how we've addressed this and how we've understood it in what we do at Farm Crowdy. More than ever before, with the introduction or the existence of COVID last year, it had re-emphasized the need for more collaboration of food value chain participants, especially in Nigeria. In the picture you can see on the right, where you have the tubers of yam, is typically what you find in the farming communities. So the farmers on the left would have produced, because they're in rural areas, on certain days of every week or sometimes bi-weekly, they bring their produce to the farm and they engage traders that will have come in from the various cities to buy off them, apart from even those that also stay in the local communities that buy these items. But guess what? With the lockdown last year, things changed, and it was an opportunity to everybody to ask that the efficiencies in this process, we need to bring about some level of innovation, technology to drive and curb all of the inefficiencies in this process. Similar to us, a little bit about Farm Crowdy. What we have done is to ensure that we have products in the last 4 or 5 years that addresses different players along the food value chain. So on the input side, the co-production side, processing and wholesale side. But obviously, the focus of this conversation is the off-farming activities. And I will tell you one of the things we did last year. In Lagos City, where we reside, where our HQ is, there was a time where the lockdown, everybody had to sit at home. Thankfully, we had a good tech team that immediately was able to develop an application such that final consumers can actually place an order for fresh produce, and it can get delivered to them at their doorstep. Otherwise, individuals will go hungry. So this was developed fast last year, and post-COVID, we ultimately started elaborating and increasing the reach of this technology that was first innovated to solve a particular problem. And obviously, this is an off-farm activities because it's post-harvest activities, because we're solving the problem between the farmers at the farm gate and the final consumer that needed to buy these commodities or fresh foods and be able to survive at home. And we extended this post-COVID to now see ourselves, apart from the final consumer, why can we start delivering to canteens? And there's a name here, and you can see called Buka. I'll explain what Buka is. Buka is like a round corner side canteen. And typically in a city like Lagos, 60 to 70% of individuals actually get their meals from these, because not everyone can afford a decent seat in a proper restaurant. So most individuals actually visit this Buka. I'll later on show you a picture of what it looks like. Right, so the off-farm innovation came from the fact that we had been dealing and working with a lot of players along the food value chain, from the farmers themselves to the processors that need certain commodities as inputs into their processing line, to also buyers outside of the country. And all of that, we were able to obviously address, and you only experience an innovation when these stakeholders actually interact, because everyone has a stake. in this scarce resource, and what everyone needs to address the inefficiencies that happens along with that. And some of the major challenges in this space, as particular Nigeria, West Africa, and also in East Africa, are things like the kind of government policies that exist that stifle innovation along these lines. Another is, like Hilary had said, the level of education these players have. I mean, Nigeria, for instance, they constitute over 70% of the population, is low, right? So adoption is low, adoption rate is low. It's also expensive, like Hilary had mentioned, especially when you consider you might need a smartphone to be able to use the technology that will help drive promote innovation and solve the inefficiencies. The cost is also expensive. I mean, rightfully and fantastically mentioned is the fact that even when they want to be able to draw down on certain credit, the historical financial records, they don't have it. The collateral security to secure such from financial institutions are not available. So how do we solve it? But all of these has also led to several innovations in how to solve it. So farm innovation is very important because, I mean, especially the off-farm, because this is how to get engage more individuals and members of the population, right? Because it's easier not to limit them to farming operations, core production, but introduce to them opportunities outside of the farm, whether in terms of processing, in terms of packaging, in terms of warehousing, in terms of distribution. There's a whole lot to be done. So after the lockdown, what we did was we introduced, like you can see, the app, right, for the B2C first. And we later expanded to the bookers. On the extreme right is a mama booker. So you go into such areas, you have your plate, she serves you with the soup, you point. So we always point to the kind of protein you want, whether the head of the goat or the leg of the goat and all of that. So it's interesting. And most individuals in the city, actually, that's where they feed from. What are the opportunities? What's the future for this in Africa? The population is growing. So, and we have a food deficiency problem. And one of the reasons we exist as Farm Crowdy is to solve this major problem of to address the United Nations development goal of zero hunger. And because the population is growing and there are a lot of inefficiencies, the opportunities exist, right? And some of the things that needs to be done, government policies that helps addressing this, financial institutions creating products that actually addresses the agribusinesses, the small agribusinesses in this space, whether in terms of insurance, which is a key thing, whether in terms of credit and all of them, ensuring that the product, financial product they actually introduce are those that actually address the pain points of these players in the space. And I've spoken a lot about West Africa, and I'm showing you what had happened in Rwanda, which is our first entry into East Africa. What we did was to solve this by being the plug between manufacturers and retailers, all in the bid to engage more youth. You can see the woman, they engage more youth in off-farm activities. Thank you so much.
Thank you very much indeed, Akindele. And you brought to life the opportunities that the pandemic presented, not least in linking the farmer through an app to the buka. But you know, I have one thing to share with you. Even those who don't know West Africa, courtesy of Netflix and Nollywood, we now also know what buka is.
Oh, so, yes, true.
That's one of the wonders of our age. But thank you very much indeed. It now gives me great pleasure to turn to her presentation to Christabel Makoha, who is head of partnerships at Aseli Africa, a strategist, a development professional with experience in developing and designing, implementing new sustainable business models and partnerships to drive those solutions that are best placed to serve those underserved populations, not least the women, the youth, and the smallholder farmers. So we particularly value your contribution today, Christabel, and over to you.
Thank you, Paul. Let me just share my screen.
Please.
Can you see that?
It's coming. Yeah, now we can.
Okay, great. Thank you so much. Let's see if I can move on to the next. Okay, there you go. So as some of the panelists have already actually talked about, by 2050, it's estimated that will be more than 9 billion humans on Earth. And that is a lot of mouths to feed. And so we'll need to produce about 60% more food. One statistic that has always been really interesting to me is it's believed that about 60% of global arable land is in Africa, which means that not only can Africa feed itself, but Africa can actually feed the world. Yet, one, Africa remains food insecure, and two, this promise of the potential that Africa has to feed the world remains unrealized. One of the key constraints to this is access to capital, as Hilary referenced earlier on in her presentation, and particularly access to small businesses who often play a very critical role in creating inclusive and sustainable food systems, and are primarily actually the ones who are at the forefront of driving off-farm innovation. And so if you look at some of the stats, it's estimated again that the gap in financing for agricultural SMEs in sub-Saharan Africa is estimated at about 65 billion annually. So the question that I just want to spend the next couple of minutes talking about is, how do we increase flow of capital to these businesses that are innovating, that are at the forefront of creating inclusive food systems? So just over the next 8 minutes or so, I'll talk a little bit about Aceli Africa and what we're doing, the challenge that we're looking to address, and then some of the future trends that I think will be important for us to consider. So Aceli is essentially a market incentive facility, and what that means is we've set up as a blended finance organization. We take grant funding and use it to unlock private sector funding for high impact agricultural SMEs. And over a period of 5 years, we hope to offer about 40 million in financial incentives to lenders in order for them to then unlock an estimated 600 million for lending towards agricultural SMEs in Kenya, Rwanda, Tanzania, and Uganda. We try to target the missing middle, which is loan sizes, businesses that require a really small loan size, however, not small enough to qualify for a micro loan and not big enough to qualify for a larger commercial loan. So there's always a missing middle there. Mm. To design, I think, the financial incentives that I referenced earlier, we did research back in 2018, collected data from about 31 different lenders in East Africa, both commercial and social lenders, to understand what actually is the problem with lending in agricultural to agricultural SMEs. And we found that the risk in lending to agri-SMEs is about 2 times higher, and the returns are about 4 to 5% lower than in other sectors. What this then means is that lenders tend to be risk averse and shy away from lending to agricultural SMEs. Secondly, one of the things we found is that even if a loan is, firstly, when you lend to an agri-SMEs, there's a high risk that they don't repay fully. For many reasons, agriculture in Africa is dependent on rain. So there's a chance that if you give them a loan, they plant, they don't harvest enough to repay a loan. But say the SME even repays the loan in full, there's still a risk for the lender that they don't recover their revenue fully because of high cost of operation. When you look at the origination cost of going out into a rural area and actually originating a loan for an SME, it's a lot higher than providing a loan for a business that's basically based in urban areas. So you have these 2 issues, the risk that is inherent in agriculture, and then secondly, the returns aren't always that attractive. So what we thought is that we can actually put a value to the social and the environmental impact benefits that we generate by lending to agri-SMEs and provide an incentive to meet that gap for lenders. And that's exactly what we did. So Aceli incentive is sort of a 2-pronged approach on addressing the issue that service providers, capital providers face. We design financial incentives to get them to be more interested and to increase their appetite in lending to SMEs. And then on the demand side, we also work with SMEs to make them investor ready by providing technical assistance program support. And I'll just quickly go through this 5 sort of prongs. The first one of the financial incentives is a portfolio loss cover. The second one is the origination incentive. And then the third one is an impact bonus. The reason why the portfolio fast loss cover is one interesting and innovative is traditional guarantees tend to, let's say, give you 50% for covering one loan. And if that loan performs, great, you don't need to use the guarantee. But if the second loan doesn't perform and was not covered, then getting a guarantee on the first loan didn't help you. What a fast loss cover allows for lenders to do is you end up building a reserve, and any loan that underperforms in that portfolio, you essentially have a reserve to meet that non-performance. Then secondly, the origination incentive. This is something I referenced a little bit in the previous slide when I mentioned there's a high cost of originating a loan for SMEs. That means even if a loan is repaid, they don't cover the cost of going out to work with SMEs to get them the loan required. And so the origination incentive is to essentially for new borrowers to be able to be given an opportunity to access a loan from a bank. Lastly, under the impact bonus, this is geared towards loans that go towards businesses that have a high impact. By this, we mean either loans that go towards more gender inclusive businesses using the 2X gender criteria, or loans that go towards businesses that have an impact on a positive impact on the environment. So loans that are going towards activity that are climate resilient and smart agriculture activities. And then lastly, we're kind of right now exploring loans that go to an incentive for loans that go towards youth-led businesses. Lastly, as I mentioned, there's technical assistance both towards SMEs to get them investor ready, but also capacity building for lenders. Lending in the agriculture space requires a slightly different approach from lending in other sectors, and so we work with lenders to build that capacity. Just a quick snapshot of what that has meant in the last 1 year. And I mean, there's a lot that we're still learning about how we are operating, but the results in the last 1 year have been quite interesting and promising. We currently have about 24 lenders who are onboarded, 17 of them are active. And in the last maybe 9 to 10 months or so, we've worked with lenders to facilitate. Hello, can you hear me? I think I got lost for a second.
No, we can hear you.
Okay, great. We've worked with lenders.
You did, you got lost.
Okay, I think I'm back now, right? I just have a minute anyway to go and then I'll wrap up.
Yeah.
So we've been able to facilitate about 180 loans, and in the span of 1 year, been able to work with lenders to get about $20 million in loans by using this approach. That means that the leverage ratio we're working with is about 11x. For every dollar that is spent on the incentives and the training is actually unlocking 11 more dollars, which is quite significant. The impact of that is we've been able to then reach about 260,000 farmers, created about 3,000 full-time employment opportunities. So I think it holds promise, and then it will be great to see how we go from here. So lastly, what does the future hold? I won't go through everything. I'll just mention one role that I think technology can play. The risk is still high in agriculture, and the cost of operating in agriculture is still high. I think there's a role that technology can play here in lowering the operational costs of lending to agri-SMEs. So for example, you can envision using things like drones to assess warehouse inventory, blockchain technology to assist with reporting and record keeping, so that lenders are actually able to validate the books that SMEs are keeping. So there's a lot that technology can help with lowering the cost, and I think it would be great to see more innovations come through. I'll hand over back to Paul, and we can take questions later. Thanks, Paul.
Thank you. Thank you indeed for that. And thank you illustrating so. It's much use Ashok time off a well-earned holiday in order to be with us. Ashok is a chartered insurer with ACII is a member of the Chartered Institute of Arbitrators. He brings a real depth of experience to us today, not least as director of CDSC, representing the Capital Market Challenge Fund. So all you've done in terms of assisting in its objectives would looking for today. Over to you.
Thank you, Paul. I'm not sure whether my internet is good enough because can you hear me?
Ashok, we can hear you fine. I think Paul's connection is the one that's catching up. So right. you go ahead.
All right. Thank you. I think thank you, Paul, for the introduction. But what it is that there have been interesting thoughts that have just come from everybody. Hilary talked about it, and then Christabel also mentioned it. The one problem that we have in Africa is that it's the older population, which is actually in farming. And what we are working with in Kenya is with the smallholder farmers. So it's the smallholder farmers who have actually are working with on very small pieces of land, and these pieces of land get subdivided as they are given over to the children. But the other area, the major area of concern is the financing of the farm inputs and farming activities. Obviously, the income is seasonal because in Kenya, most places is rain-fed irrigation. So what happens is it's rain-fed planting. So there's very little irrigation that takes place. So we really do not really introduce, we don't really have a constant income for the farmer, and which actually would help the children to see that if the family is doing well from farming, then they would also be able to really look at staying on the farm and carrying on with the agricultural activities. Over the last 5-6 years, we have really changed the way we are doing our insurance business, because insurance, we feel, is the most important area that can actually support the farmer and make sure that the farmer has a constant income. Now, we have developed in conjunction with the World Bank and the Kenya Ministry of Agriculture, a area yield insurance index. And what happens is that we would now agree with the farmer that they will get a 70% of the yield that they would have expected from their initial planting. So that what would happen is that they will always have a constant income, and that income will support them in their farming activities, and also hopefully give them a better lifestyle. So what we have basically done is that we have used not financiers, not the real bank financiers, but aggregators. Aggregators are the ones who are actually providing input finance to the farmer. And what they do is that they give the farmer basically all the inputs, and this is taken by the farmer as a loan. It is insured by us as the insurer, and we make sure that if anything happens, there are 2 or 3 types of insurance. One is the yield insurance for the crop. Second one is the and so credit insurance in case anything happens to the farmer. And the third one is if there is a death in the family, then we would pay for the burial costs. So those are the three insurances that we provide. But what it is that the unfortunate part is that the aggregator only insures the loan that the input loan that they have given. So we are looking seriously to see if we can get the aggregators now to tell the farmer of the insurance cover available to them to insure the whole crop. And it's something that is very important. But we feel that Agritech, that's the first stage of area yield insurance index is the first step. But the same thing we have used technology for the pastoralist in northern Kenya, where we provide cover for pastoralist for basically the forage on the ground. So when there is not enough forage, a trigger is reached, and we would then provide the money to the pastoralist to buy feedstock until the next set of the rains that come. So, but that is completely technology driven. We do not even see the pastoralists. We do not look at how many heads of livestock they have. But what we do is we rely completely on satellites to tell us where there is enough forage and so on. But moving from this, what we have done is that because lots of Kenyan farmers, they are very entrepreneurial, but the problem they have is that either the land is not good enough to farm because of lack of enough rainfall. So we are now trying out another experiment. This experiment is we are trying up with a greenhouse supplier. The greenhouse supplier, what the greenhouse supplier does is that it provides a full greenhouse with drip irrigation and full agrotechnical services. So they will go and tell the farmer exactly what to do, where to plant it. Now, where we fit in is that the farmer has to buy the greenhouse. The greenhouse supplier cannot really finance it. So they are tying nuclear, becoming a nucleus to tie up with a bank and also with the farmer, and then supply the farmer with a greenhouse, where the loan is provided by the bank, and we would then insure the greenhouse and also the crop. And in case anything happens to the greenhouse by way of perils like fire or windstorm, wind damage, we will pay for the greenhouse to be made sure that it is the farmer, the financier gets the money back. So what it is that, but the interesting thing is the greenhouse supplier gives the farmer full support on all agriculture inputs to go in, what to plant, when to plant, and how to plant. And at the same time, when the product is ready, they'll be able to find the marketing. So this one is an experiment that we're just about to launch, and we want to make sure that we can go into parts of Kenya where there is not enough rain. So this will be basically this we hope will drive a lot of farmers to now start taking out planting in greenhouses. So with that, I think this is an area that we feel that we will be able to grow a much more larger farm-based population who will enjoy their farming activities and also get their children and the youths involved in it.
Thank you very much indeed, Ashok. And listening to you, I mean, one can well see how and why APA won the European Microfinance Award for strengthening resilience in climate change, because of the way you're constantly seeking to expand the opportunities for small-scale agricultural farmers and for the smallholder in general. It's so important to move beyond the aggregators in the way that you describe. So thank you very much indeed for that. Well, we've now moved into that part of the proceedings when hopefully we broaden out the opportunities for participants to contribute. So whilst I would encourage everyone on this call to think about what they might want to ask and to either put their hand up or to put it up there in the chat box. If I could begin by asking you all, and let's see who responds. I mean, reference has been made to restraints that stifle innovation. Would one or more of you like to give some examples of those restraints and how you have adopted strategies in order to overcome them, whatever the nature of those restraints, whether it's market failure or issues with regulators? Just some examples whilst our participants are gathering their thoughts. Now, if you don't volunteer, the fickle finger will descend on you, and I shall just, all right, I'm going to begin with Akindele, then I'm going to go to you, Hilary.
All right, then you got me. Okay, thank you. So I'll share a little bit about our experience. When we started, we identified 4 major problems of smallholder farmer. Obviously, they begin the value chain from production. It was access to funding, access to viable inputs, access to superior markets, and access to good agronomic practices. And what we thought was the low-hanging fruit is the funding bit, the finance bit. And like we had all agreed, historical financial records don't exist. They don't have the collateral security. We actually introduced crowdfunding as a means to solving the funding bit problem. Obviously, now that led to being something innovative. Now had to face the various regulators by the time they were now drafting those regulations that will guide the applicability of these source of funding. For us, we moved now to another source of funding, which is DFIs. And that's because eventually it was realized that crowdfunding wasn't the perfect funding fit for agribusiness, especially at the core production stage, right? What we have now done, just to address your question again, what have we done? Was because of the number of years we have spent with these smallholder farmers, we understood their pain points. Farmers, their relatives dying, access to good health. So with a major underwriter in Nigeria, we're able to design microinsurance that addresses the life pain points of these smallholder farmers. And in fact, every participant along the food value chain knows now for as low as $10 as an annual premium, they can actually draw down on several things that reaches as much as $2,000 if you put it all together from just $10 as an annual premium for the year. So, I mean, so all of this came from innovation, solving the problems that off-farm activities brought about.
And your insurance regulators, the central bank, everyone was happy with that, or did you have some issues with them?
So what we did was to this time around collaborate with an underwriter, a regulated underwriter. So it's their product, but they designed it for us because, so they're regulated, they're fine, and we're good.
Understood. Thank you. Hilary.
Sure. So I'll mention very quickly two things. One is in Kenya, for some time, we had an interest rate cap. And what that did was that shrunk lending to the agriculture sector overall from around the low 50% to around 36%. And all of that funding just went to large commercial farms and off-farm enterprises. And so, smaller businesses, smallholder farmers were cut out of that. The other example that I'll give is actually a very simple example of some of the challenges when trying to work with banks to get them to reach the sector. With the startup that I ran for a number of years called Tula, initially we tried to work with the banks to extend lending. And we had a case where at one point we had collected all of the KYC data for these customers. We had done some initial risk assessment, And all we needed to do was the bank to send their loan officer to come and meet with them. And they wouldn't come, and we couldn't figure out why. And then we realized that all of the loan officers in a lot of these banks earn it's essentially a transport allowance every month. And if they don't use it, they pocket it. And so it was a very simple example of how something as basic as an internal incentive can actually severely disincentivize the bank and the financial institution from serving this customer base.
Yeah, that's a very, very powerful example. And what happened? I mean, did you manage to address that disincentive? What happened?
We did, by deciding that we needed to do the lending ourselves. Which, we entered into that decision with a lot of trepidation, because of course the risks are incredibly high. But we had the relationship with the customer. We had all the data on the customer. We were fully digital, and had a credit score. So we were able to serve them more quickly and efficiently than the banks could.
Yeah. Christabel, have you got any specific examples you'd like to share about, restraints that stifle innovation and strategies for overcoming them?
Yeah, sure. I think I'll probably go back to the issue of capital. One of the challenges that I think people who are trying to innovate is actually not having funding for it. Hilary already talked about, you're either getting funding from friends, family, or fools, right? And so on one hand, we all say we want people to be innovative, but then when someone comes up with an idea that remains untested, or rather it's not yet tested or hasn't scaled yet, it becomes quite difficult for them to access capital, whether that's debt, equity, etc. And so within the Aseli model, I think one of the conversations that now we're trying to get people to start to have is that one, innovation cannot just be left to private sector alone or entrepreneurs alone. We have to explore the role that public funding actually plays in driving innovation. I think even in markets for lack of a better word, in the global north, agriculture is very much subsidized, but there's somehow a belief that in global south, we have to innovate, we have to create sustainable agricultural markets, and all of that has to be done by private sector money, which innovators can't even access. So starting that conversation of what is the role of public funding in driving access to capital for entrepreneurs, and that's sort of what led to, I think, some of the designs within the Aseli model. I would say there's probably a lot we're learning about how you can take grant funding, which is a form of public funding right now, to then unlock private sector funding. The next step towards this is developing enough of an evidence base that then now we can start to engage with governments to say, here's a role that public money can now play in unlocking private capital. And hopefully over time that reduces the need for grant funding. I don't think it reduces the need for public funding ever, but it starts to reduce the need for grant funding. So I think in summary, the biggest challenge I'm seeing, I think, with innovation is ideas are there, they're not always funded. Those ones that are funded are typically tech-enabled for the most part, but I think innovation could come from anywhere. And so we really need to explore the role that public funding can play in driving that space.
Thank you very much for that. And I think that's something we're going to return to, if not in the course of this webinar. I think we need to come to it in another. I've got something coming up from Simon. Simon, welcome to the discussion. And it's interesting. What he asked is, have you got any thoughts on why donors and businesses alike continue to invest in programs such as farmer productivity improvement when smallholders who don't have land tenure and thus no long-term outlook on their land are unlikely to make any long-term investments? So there's this whole question, the vexed question of land tenure and the extent to which that is holding back the sector. I mean, can we afford to wait until we resolve the land tenure issue, where people are seeking to resolve it, what success is that having? Ashok, any thoughts on that question?
I'm just reading that, and as you were speaking, I was reading. No, I'm not quite sure which country Simon is referring to, because in Kenya, we do not have that problem. The land is owned by the farmer, and the big problem that we have in Kenya about the land is that even though it is owned by the farmer, is because of the cultural aspect of it, is that when the farmer has four sons, the land will be divided into four units or 5 units, because the farmer gives one and he will give 4 to the children. So the problem that we have is the land, pieces of land become smaller and smaller. And that's where the worst part is that the productivity of the land goes down. There's something very surprising. Kenya is supposed to be a big maize producer, and yet we still import maize. And Kenya, if you seriously look at the farmers in Kenya, they will be able to provide all the maize that Kenya needs, provided they were able to grow, have better growing practices. And so what we see is that we need to now encourage them onto how to grow the crop, and that's where insurance comes in. The good thing that has happened is as part of the area yield insurance cover, 50% of the premium is paid by the government. So what happens is the farmer only has to fund 50%. So we have support from the government in this one. And so what we are trying to is to encourage more and more farmers to take up that insurance cover.
That's a very important point, Ashok, because it's a response in a way to the very valid question that Christabel asked. I mean, what is the role of public funding? And clearly in Kenya, you've had a situation which you don't have everywhere, in not just in Africa, but in the world, where the Minister of Finance and the Minister of Agriculture sit down together and work something out. That's not always the case, believe you me. And very often and I should know, having been Chief Secretary to the Treasury in the UK, very often there's a tension there that isn't realized.
Paul, could I? Oh, sorry,
yes.
sorry.
No, come in, Hilary.
Great. I just wanted to follow up because I agree 100% with Ashok's point. And I think the subsidy for insurance is very, very well placed, especially because we know that many smallholder farmers only have a demand for insurance once something goes wrong, which is by that point too late, right? However, on the other hand, we know that a lot of the subsidies around, for example, fertilizer, are actually very detrimental for many smallholder farmers, because it's usually intended for them, but they're not the ones who access it, largely because of the process involved in actually securing it, and smallholders not being as savvy and knowing how to just navigate the system. So I think there are a lot of distortions that can be put in the market as well. Yeah. The insurance subsidy is not one, but there are many others.
So true. And very often the way that the fertilizer is subsidized is in a way that actually facilitates people who import the fertilizer rather than people who might actually be producing it in country. This is some of the perversities, frankly, that are out there, in which we disadvantage our own African industries and actually promote external ones. I mean, it doesn't make any sort of sense at all. Akin, the point about land, the point about land, I think, was largely directed at us in West Africa, when this is an issue. If the chief owns everything, then why should I invest? I mean, it's, to put it bluntly. How are you handling that? How do you think that needs to be handled?
So to be honest, right, most of the smallholder farmers, right, have land inherited, so across the generation. The major problem they have is typically each of them has access to about 6 plots of land, but is only able to cultivate 1 or 2 because of lack of funding, viable inputs, and all of that, right? Even though the Land Act, right, the legal part of it says all land belongs to the government, you only own it for about 99 years. So the major problem is not availability of land, but what are the tools, equipment, funding required to be able to actually cultivate the access you have? Because most of the time, they're only able to work on a 1/6 of the access that they have to arable land.
Yeah. I wonder.
I wanted to jump in here. Just one. I think I wanted to agree. I wanted to agree with Simon a little bit, because I think the reason why I agree that I think we focus on productivity, for example, and the fundamentals that are not in place. Yes, for example, in Kenya, a lot of farmers do have ownership over their land. But if you look at who's on the farm digging, who's on the farm actually producing, they're women. Women in Africa contribute to about 60 to 70% of all agricultural labor, yet they own only 20% of assets. I think the issue is that those fundamental problems, one, are harder to solve, just frankly, and they're also political and cultural. How do you start to have a conversation about how women can own land? And if you don't own the land, you don't have a long-term outlook, as Simon is suggesting. If you look at, for example, the role that a value chain like maize plays in literally politics, then you find development actors sometimes stay away from talking about how they can work, let's say, the maize value chain, because in a country like Zambia, it's very much tied to the political season. So I hear what Simon is saying, and I agree that it's not just we should abandon that and fix the fundamentals. I think they need to be happening in tandem, but the reality is that those fundamentals are harder to solve because they're tied to either political challenges or cultural challenges that we're facing. And so where do you even begin to address some of those issues?
Yeah, well, I mean, political challenges have to be addressed politically. And that means people have to organize. I mean, you know, there's that saying, and it's very true, that power concedes nothing without a demand. It never has, and it never will. Power concedes nothing without a demand. It never has, and it never will. So the demand has to be made unto power, and it's addressing the point that Nick made very effectively early on, that actually, if you look at what's being the priority that African governments are giving to agriculture spending, actually, I'm afraid it's going down, not up. So that we're not meeting the objectives that have been set by the Africa Union. And I think one of the messages that we need to get out there is that if the Africa Free Trade Area Agreement is actually to start delivering on the ground, not least to smallholders and owners of small and medium-sized businesses, then this is something that's going to have to be addressed. We're going to have to spend more on supporting agriculture, and that is a political decision. Any thoughts and reflections? One on how you enable the voice of the consumer and the small business person to be heard better. Any experience of that you'd like to share, any of you? Akin, you had a very dynamic Minister of Agriculture in Nigeria, your namesake.
Exactly.
He went on to become a very effective president of the Africa Development Bank. What are the lessons there?
Okay, so what he did in particular was to focus on the input side. We've talked a lot about fertilizer, and he ensured he worked with systems that effectively got these inputs to the smallholder farmer, right? And so if it's the question about how do we ensure that these smallholder farmers are heard? How do we amplify their pain points such that the right individuals in the community or in the nation are able to address this problem? I would say is to strengthen the clusters they maintain. So the smallholder farmers or players usually are members of cooperatives, right? So usually when you actually want to cultivate certain crops, you need to just find out what states in the nation has good land for that particular produce, and then you go there and work with the communities. And the easiest way is to work with these cooperatives, right? So if anyone can actually bring solutions that that ensures collaboration of different cooperatives of farmers or players of the food value chain, then it will be easier to amplify and let their voice be heard.
Thank you. And that brings us really to a question that Sola asks. Is anyone working on advocacy? Are there thoughts around amongst you on the need for advocacy for off-farm operations and financing so that farmers become more aware of the solutions available? I mean, Sola says, well, do people actually know that you're out there and offering what you are offering? Ashok, how did you go about this in insurance?
Well, I think one of the biggest for agriculture is politics is not very good for politicians are not really great friends of farmers, because the farmers are there for their vote once every 5 years. After that, politicians forget the farmer. Now, the thing is there's something that's very interesting that's happened in Kenya, not for the main farmers, because the main crops are maize and maize, sugarcane, potatoes, and so on. Those are the main crops. So not many people pay attention to it. The current cabinet secretary has actually done a lot for the tea farmers and the coffee farmers by changing the way the marketing of those two products happen. He's tried to break away the controls by the trade organizations or the Kenya Tea Development Authority, to see that the farmers can get better prices for their product. But for something like maize, for the maize farmer, even the cooperative doesn't seem to work. So what we are relying on a lot more now is the extension officer who are working with the county agriculture departments. And we are trying to encourage them to sort of see if we can use them to make the farmers aware of different ways of growing their maize, ensuring it. And Hillary did to mention about the subsidies that we have for different fertilizers, etc., and so on. That subsidy, it doesn't get to the farmer properly, and that's something that we have to worry about. Now, perhaps the advocacy is something that I see missing in Kenya right now. The advocacy for the small farmers, that advocacy is not there because the cooperative societies don't seem to be doing anything either for the farmers. And I believe that not many farmers are belonging to the cooperative societies. So what we need to do is we need to see how we can, in fact, while we are working on InsurTech or AgriTech, we should also look at to see if we can mobilize the farmers to start thinking about improving the way they benefit from the government.
Thank you. I mean, we've got to begin now to round this off and to move into the next session, which is the roundtable. But before we do, you've raised the very important issue, Ashok, of extension services. And in Kenya, you've never lost extension services. You resisted the push in the latter part of the 20th century from the then World Bank. They've changed their position now, but in the latter part, the 20th century, as we know, as part of this sort of the various strategic adjustments that they were pushing. They were against extension services. But it has been a way, Christabel, in which there has been public investment in agriculture. How do you see extension services in the 21st century developing?
I think one of the trends that we've seen in the last couple of years is leveraging digital platforms to make extension services available. I'm just forgetting the statistics right now, but a while back we were looking at the number of extension officers who are available in Kenya versus the number of smallholder farmers, and the ratio was insane. Basically, there's no way that if you're using humans to try and reach smallholder farmers, you'd actually be able to provide extension services to the number of smallholder farmers. So we're seeing an increase in development of innovations and ed tech platforms to try and reach smallholder farmers. I think with varying degrees of success, I think there's a lot we're learning about when is the best time, for example, to send farmers SMS, learning that the morning doesn't make sense because that's when everyone is sort of going out into the farm. So maybe the evening makes better sense. Do you use SMS versus IVR versus radio? So I think we're seeing an increase in innovations around use of digital platforms to provide extension services to smallholder farmers. Thanks, Hilary, is mentioning one extension officer to 3,000 farmers. That's just, it doesn't quite cut it. So on one hand, I think the use of technology to enable farmers to get access to information. But beyond farmers, I think there's small to medium enterprises as well, for whom it's important for us to focus as well. How do we provide business and finance training to enable them to be a bit more either investor ready or to start to transition from the way currently we do farming in Africa on average is it's very much so my father did it, so I'm doing it as well. It's not very much done as a business. So again, we're starting to see an increase in institutions that are focused on providing business development and financial management skills, for example, to SMEs to help them to start to adapt, I think, the way of thinking around agriculture to become a bit more of a source of revenue, a source of income, a source of a job that someone can actually be proud of. But I think that we still are a long way to go from understanding how we can use technology a lot better. The last thing I think I just had recently, I'm not sure if it's with Google, but they were trying to even set up systems where you can take a picture of a plant, with a disease that it has, and then you get feedback immediately on this is the kind of disease your crop has. This is where you should go and get the right inputs to use or the right fertilizer to use, etc. So I think there's a lot around artificial intelligence and data and big digital platforms that we can use to really start to meet that gap, that ratio that Hilary has shared with us.
Thank you. Well, Siani Malama makes the point. Tech is a great business driver for scale, and experience on the ground still requires human engagement to break down trust barriers with small scale farmers. So yes, it is about building up trust. And I think the success that all of you have been in this field of agribusiness has been well as illustrated by your contributions today. You can see why your customers and clients trust you, and we're hugely grateful for sharing with the passion, enthusiasm, and insight that you have. Nick, we're now breaking out into the next stage of our gathering today. Would you like to take us into that?
Yes, thank you. Just a quick word to say thank you again to all our speakers for their presentations, which were excellent, some incredible insights. So we're going to move straight into part 2 now, which is a roundtable. Now, typically in this stage, we'd split the room in breakout rooms, but since we have the one roundtable, which is going to be led by Farm Crowdy, we'll all stay here. So no need to move, no need to select a roundtable. You just have to stick around to hear more from what these guys are doing on the ground and to give your say and contribute as well. So without further ado, I can hand over to Charlotte, I believe, who's going to be leading the roundtable. And he'll be able to tell us more about what to expect, and we'll take it from there. So thank you very much, and thank you, Paul, as well, for your contribution.
Pleasure.
Now, we see the entire society item 11 will be happen. We see the kind of trouble they be cooking for them, starting from social them, man picking and something.
All right, thank you, everyone. Here's a welcome to this segment. I think it's just going to be an extension of what we have going already. We've got some extensive, introduction into what the roundtable should be. But I'm looking through the room and I'm trying to get a gauge for the audience we have to know how best to engage. I'll share some short preamble, and then we can just reduce this to some quick conversations and probably action points that everyone can run along with. And then continue, their great work that they're doing out there and wherever it is you are operating from. The implication, of poverty on the smallholder farmers mean they get to do less. They're malnourished. They can do more. They fall ill easily. Or they've got family members who fall ill easily, and that takes off probably the disposable cash. They have to focus on the work that they do. While the poverty implications of off-farm income have been analyzed in different developing countries, I'd say much less is known about the impact of off-farm income on household food security and nutrition. I see that as a core determinant for that average farmer, who we might also call an agribusiness operator, how well they can settle in and focus on the task. I'll give you a case in point. Here in Nigeria, the season before the pandemic was one where we had a heat wave, which was the result of an extended dry season. Here, it meant, majority of farmers whose livelihoods were primarily tied to core production suffered, a lot of setbacks in terms of the yields they were able to get. And then coming out of that, it was the pandemic and it was a lockdown. And, the whole of the country here, I'm speaking about Nigeria, and I guess that relates to many other countries represented on this call, were locked down to be able to combat the virus, the spread of the virus at the time. So for us here in Nigeria was, a double whammy. And for that smallholder farmer who probably didn't have an idea on how to make extra income from off-farm activities, it's been terrible. And I feel that adds up to the statistics we have about the looming, food scarcity that has been projected. And we also know that off-farm income contributes to higher food production and farm income by easing capital constraints, thus, improving household welfare in many ways. So on this roundtable, I'm just going to cut the chase. And I'm going to have us just have conversations that would allow us to have key take-homes around 4 key areas. Now, we recognize the large-scale system change requires cross-sector collaborative work. A collective approach is needed where linkages between food production, natural resources, personnel, population health, economic vitality, and social equity are considered together. To that end, this roundtable will focus on conversations around engaging and coordinating system change across public and private partners. Run along, aside our speakers, who have been introduced. I'll just try to get a quick feel of who we have in the room. Pardon me, I'm just going to call your name and you will unmute. You have just about 3 seconds. Your name, where you work and what you do there, just so I can get a quick feel of our audience on this round table. All right. First off, if you're unable to speak, if you've got background noise, you can just go ahead and type. I'm going to keep my eyes on the chat segment for this part, so we can run along quickly. I hope we can be done with the introductions in, say, about 10 minutes. All right, so I'm going to skip Nick State, who is our host. He's introduced himself, and we all know who Nick is. Next on my screen is Abiola Adesina. Name, role, and the organization you work for, if you can, quickly. All right, I'm just going to give, say, 2 seconds in between each call. If they're not responding, we'll just move on to the next person because we have to do the most we can with time today. All right, it's tagged him in messages. Abiola is an insurance executive at Farm Crowdy. Next on my screen, I have Akindele Phillips.
Hi, Shola. My name is Akindele Phillips, and I'm the CEO and co-founder at Farm Crowdy, an agri-tech platform, global platform, connecting players of the food value chain. Thanks.
Thank you very much. I've got Amal here. Amal, are you able to introduce yourself?
Hello, hi everybody. Thank you for the opportunity to introduce myself. So I spent 17 years in the tech world and worked recently for one of the main player in agri and decided to join Agrosphere, who is a niche player in Africa and an agri-tech.
Thank you very much, Amal. Ashok, I guess we had a few people who joined late. Ashok, do you just want to introduce yourself quickly?
Yeah, Ashok Shah. I'm with APA Insurance in Kenya, basically carrying out agriculture insurance for smallholder farmers.
All right. Thank you very much, Ashok. Beryl? Beryl, are you there? Are you able to introduce yourself? All right, I'll move on. Celia Moore.
Hi there. I'm Celia, and I work with Nick, supporting the work they do at Bobab. I used to work at IBM and was very involved in development issues in Africa, looking at how technology can improve systems like water, predict weather, and so on, and general sort of business development. So agriculture is somewhere that, and Africa, something I'm very much interested in because of all the things we've been saying today about the potential for its economic impact.
Thank you very much. Next up, we've got Christabel. Christabel.
Hi, I'm Christabel. I'm head of partnerships at Aseli. I'm based in Nairobi right now. Thank you.
Thank you very much. Epi Premise. EP, are you able to, Epi, are you able to introduce yourself? All right, I'm going to move on to Eric.
Yes, hello.
All right, let's take you now. Yeah, go ahead.
Yeah, good afternoon. No, I just say I'm happy for the forum I'm following up, and it's a good venture for us to leverage and really improve on agriculture in Africa.
Thank you very much, Epi. Thank you very much. Next on my screen is Eric. Eric has introduced himself in the comment section, is an accountant assistant, Upper Life Assurance. Next on my screen, all right, I've got FC_ABJ.
Hello, everybody. My name is Charles Odiachi. I work with Farm Crowdy as a business manager out of Abuja, that's the capital of Nigeria. I manage Farm Crowdy's government and non-governmental relationships with all those entities. I'm excited to be here.
Thank you very much, Charles. Gerard Wine. Gerard.
Hi, everyone. I'm Jared Wynn, working with Small Foundation. We're family foundation focused on supporting and building the ecosystem for rural impacting micro, small and medium-sized enterprises, particularly focused on access to finance, technical assistance and skilled human resources, as well as cross-sector collaboration. Thanks, everyone.
Thank you very much. Hilary, you want to introduce yourself one more time?
Sure, Hilary Miller-Wise. I oversee Bolt Food in Africa. I have worked in the intersection of agriculture, financial services, and technology for more years than I care to admit.
All right, thank you very much. Jean-Philippe.
Hi, my name is Jean-Philippe, and I work for Agrosphere. Thank you.
Thank you very much, Jean. Thank you. Kenny?
Good afternoon, everyone, or evening, or after. Yes, my name is Kenny Kariuki. I work at CEO Network as a director. I'm an agricultural political economist. And yeah, I'm passionate about agriculture and all the solutions we're discussing here today. Thank you.
Thank you very much. Next on my screen is Minor Shah. Yeah, Minor Shah, I guess. I pronounced that well. Apologies if I did not.
Good afternoon. Hi, I'm Mina Shah, and yes, it's a good platform to be on. So I've just logged in to hear our group CEO, Ashok Shah. Thank you.
Thank you very much. Thank you. Paul Halpin.
Hi, everyone. I'm Paul Halpin. I'm based in Mauritius. I've been living and working in sub-Saharan Africa since 1996. I spent 25 years with PwC, half of that time as a partner. Left there in 2004, did 10 years of my own entrepreneurial things, mainly in the tech and IT-enabled business sectors. I've been a non-executive director and currently a member of boards of tech companies in the Naspers and Process groups. And I'm also on the board of a NASDAQ-listed travel tech company. So I'm very interested in agri-tech as a way of accelerating the development of the industry in sub-Saharan Africa. And I'm willing to explore and offer to help anyone who might be interested in someone with my experience and background. So really, I'm here to see if I can help. Thank you.
Thank you very much, Paul. Thank you. Paul Mbo. Paul, are you able to introduce yourself? All right, I'll move on to the last name that I can see on my screen, and that's Siani. I think Siani introduced himself in the comment section. He's head of inclusive insurance at Upper Insurance in Kenya, key focus on emerging customers. All right, thank you very much. I feel we've got quite a number. If I missed your name, apologies, that wasn't intended. I was scrolling through the screen and, I probably just went from top to bottom as quickly as I could. You could just drop your name and, your title, the company you work for in the comment section, and, other participants can see that and know, for, who you are and what you do. Thank you very much. So moving on, we've got just about some 45 minutes to say somewhere about 50 minutes to just have key conversations around what we can take away, from these conversations we've had today. I will hope to drive these conversations around 4 key action areas. One will be people. We've spoken about smallholder farmers. We've spoken about, value chain participants, whether agtech or core agriculture production. And under people, I hope we'll be able to speak a bit more to advocacy and education. Secondly, environment. I would hope we can, take away a few action points around ease of doing business, probably land tenure issues as well. Third, economy. We've got an economist in the room. Hopefully, he can weigh in. on financing off-farm innovation around the economy, government policies, private sector participation. I hope we can get around that. And more importantly will be equity, which is like the bridge that puts together that nexus for how all of the participants, and the conducive environment in which they get to do what they do, will meet. Before we start the conversations, I'd like to say each action area, I would go over them and just keep the room open for anyone who has, a point to chime in concerning them. Each action area should have some proposed goals, strategies, or anticipated measures of success that anyone operating in this space should look out for. The primary purpose of this roundtable is to solicit feedback from all of the stakeholders in the room, and that will be the goal. All right, so first off, as it concerns people, in the words of Peter M. Senge, he says business and human endeavors are systems which tend to focus on snapshots of isolated parts of the system and wonder why our deepest problems, never get solved. So we're going to hope with the variety of the skills that we have in the room, we can speak to some of these issues as it relates to financing off-farm innovation. People, conversation started around advocacy. Do we have anyone else in the room who wants to chime in as it relates to people? What should we be doing in addressing people being educated, being informed? The context I created about how we suffered a double whammy, or heat wave, followed by the pandemic here in Nigeria, for example. I would want to assume that if we had farmers who had a second layer of off-farm operations, they probably would have been able to keep livelihood, together around that season. But for those who depended heavily and solely on co-production, we see there was a big hit, not only to the fact that they couldn't earn as much, some couldn't even feed as well. The kids became more, malnourished, about that season. What should we be doing more? What should we be doing better in getting farmers, food value chain participants, more aware and more educated around off-farm innovation? If you want to make a point, you can just go ahead, raise a hand. I'll give you the right of way to speak, or you could just post a comment in the chat segment, and we can take it on from there. So on people, anyone trying to someone trying to give us an idea on what we should be doing better in terms of getting people more informed, more educated around the possibilities and the opportunities available, of farm operations and the financing of the operations, as it were.
Shola, can I make a comment? It's Paul Halpin here.
Thank you, please, go ahead.
Yeah, so, I'm by no means an expert in this area, but from what I've seen, and I have done a little bit of research, it appears that some very good efforts are being made by the universities and above them, the major funders overseas, like the foundations and FAO, in routing their monies for impact investing into what they would perceive to be reliable routing channels for large funds to raise the level of education. But my observation is that, as ever, the universities usually fail to provide the type of education that will transform small farmers into commercially viable units, teams, or entities, because they have a restriction in terms of what they can provide by way of programs in education. And usually what a small farmer needs, and I come from a farming country, small island, Ireland, and there's usually a need for a combination of the technical input and knowledge and the commercial understanding of how to make money. And usually a degree-based education through universities doesn't provide that type of input. So there's a significant gap. And I just wonder if any of these people have ever gone to the level of asking those who are currently running farms at the level that you're touching in Farm Crowdy, what do they need in terms of education? Because it's one thing for the funders and the big policymakers to say, we're doing something, but it's another thing to be able to say that the something that we are doing is having impact. And I think we're losing a lot of people in terms of competing for talent in the agricultural and agri-tech sector because of that gap. And if someone was to come, now here's a commercial opportunity for someone was to come and say, we're not focused on whether we have bachelor degrees or certificates or diplomas or masters or PhDs. We're focused on raising the overall level of education and giving people what they need. And we've done a lot of research, and we formulated a combination of agricultural education and commercial education. You know, I think that's the sweet spot. That's where people need to come together. And if we can have coordinated effort and less of the layers of bureaucracy and oversight that comes with the major funders and the organizations that are destined to do good somehow, despite the layers of governance they have to go through, then we would really be touching the lives of people that you're talking about. Just a perspective. Thank you.
Paul, thank you very much for your perspective. I've got some response to that, but I'd like to leave the room open. Anyone wants to respond to Paul? I think anything in that regard to ensure that education being dished out in schools really matches the reality of the requirements on the field. One quick way I want to look at this is saying, look, agriculture is taught in schools. Here in West Africa, I'm not sure there's so much curriculum around agribusiness. And, whoever's going to teach agribusiness got to be someone who's hands-on or who's worked side by side, smallholder farmers, to know what the pains are and to deploy the few solutions that have worked or not worked, to be able to teach that effectively. But I'll leave the room open for about a minute.
Shola, if you don't mind me jumping in and, first of all, responding to Paul's comments, but then also making a brief comment as to the original question around engagement. First of all, Paul, I massively agree that there are huge issues at tertiary education level. Before BOBAB, I used to run an NGO called the Planet Earth Institute, major mandate of which was to promote and invest in PhD level research on the continent, some of which we did in agriculture. Now, a fundamental issue exists whereby, first of all, tertiary education enrollment rates across Africa are historically low compared to world averages, which in and of itself is a challenge. Then when we look at key industries like agriculture, enrollment levels drop again. So despite it being a hugely significant one in terms of job creation, GDP, actual participation in agricultural related courses, extremely low. And then another fundamental issue, which I think could be addressed effectively with tech, maybe we could discuss it here, I don't know, is working with educational institutions to supplement domain-based education, so agricultural-based education with enterprise development training, entrepreneurial skills development training, so that as well as coming out of university, either as an undergraduate, a master's student, or a PhD student, or even before that at high school level, as well as coming out with knowledge around a particular subject domain, they also come out with knowledge and experience about how to apply skills to a business context. That, I think, is something that could be achieved. It's something, incidentally, that BOBAB is looking at. How can we leverage our streaming platform to deliver educational content as well? It's a little bit further down the line, so I won't get into any more details now, but it's certainly something we're interested in looking at. And then just on the point of engagement, I'd like to hear actually a little bit more from Farm Crowdy on this, and Christabel potentially, because I've seen so many, great ideas, great platforms, great products fall down because they were not able to sustain engagement with their audience. So there might have been a good initial sell, but then usage dropped off and became a yet another platform in the graveyard of digital platforms. And I'm just really curious to know how you guys have been so successful in not just engaging the farmer initially, but then also sustaining and growing a digital ecosystem full of farmers. How do you, what are the communication methods you use that perhaps other people could use that get the message out there originally, but then continue and maintain engagement? That's the key thing I'm interested in.
Okay.
All right. You specifically asked, Jared, your hand is up. I recognize your hand is up. I'm going to take you next, but because Nick asked specifically what Farm Crowdy is doing in that space, Akindele, do you want to weigh in?
Okay, let me help you a little bit. Right. So what Farm Crowdy had done was to create specific app. And I know you go, but the rural areas, many of them have access to internet, smartphones. But what we had done, we worked with the cooperative model. So if we're going to plant maize, for instance, the first thing, okay, there must have been a demand. So everything is demand driven. Says we want certain tonnage of maize. We go to and check where the Ministry of Agriculture has earmarked, what state has been earmarked to be good for maize production. So we go to those communities and reach out to cooperatives. We have a process of identifying the farmers that fits our model, that we can have some level of trust to be able to work with us. So out of, say, 20,000 farmers, we pick only 2,000 farmers in this particular community, and we work with them. What we also now do is actually designate a technical field specialist to these communities. This technical field specialist is already has his app, right? So communicates with the headquarters and is able to get real-time updates. So if something happens, shares with the headquarters through that, and usually lives there, but from time to time can go to cities and get connection if there's no connection in a particular village. At the end of this production, right, because you only work with 2,000 farmers, those farmers will eventually be your ambassadors, right? So we've built a family, we built a relationship because our person was living in the community, was eating with them. So we built a family such that when we are done with the production in those states and we are in other areas, because of the bond, we can still reach out via phone calls. And I would say, almost 80%, 70% of these places, at least at the minimum, you can make phone calls. So it's not that bad. So we can always communicate with them. However, to improve on that is what is one item we're supposed to deploy soon, and that's being able to that they can communicate via SMSs and they will receive responses in their local dialect. That's still in the works, but that's the process we've adopted. Work with cooperatives, pick in the farmers, work with them, make them the ambassadors, and eventually most of the time now, even when we've not done co-production, we help aggregate what these farmers have produced and sell. That one is an ongoing relationship throughout the year. So if a processing organization reaches out and says, I want such a commodity, we send word out to our ambassadors, and each of them will let us know anyone that has that particular commodity, and then we know where to go to. So that's what we've adopted in the last couple of years.
Thanks, Akindele. Jared, you have the floor before we move to the next one. Thank you.
Thanks very much, and I'm glad you gave the floor to Farm Crowdy there, because they give a real good example of where where tech does work in that response. And my initial hand was up in response to Paul, but also Nick kind of gave a good response around tech being helpful at that kind of technical assisted learning stage, in even as we spoke about outgrower schemes and platforms that can be used here, and really addressing kind of at that lower level that Paul was speaking about. And being probably happened to be the only other Irishman on the call, Paul, in our context, there is also a concern around the addressing at that smallholder level to be a better smallholder and going kind of beyond that level, which feeds into some of that aggregation that's happening in the bundling of services. And there's a point around that bundling of services and partnerships in achieving commercial models in these interventions, and how important that is. Even from all our speakers there today, there's countless examples of that occurring, and where it can be successful, and the need for that and being pushed further. Kind of moving up the chain. We spoke at the start around the importance of youth, and it was mentioned about the importance of human intervention and building that trust and stuff. And where tech can have a role within that, it's just as Paul mentioned, universities, and I agree with you for the most part around funds being put in that space, but there's a space for engagement of youth there and the agripreneurs, and linking that up to these tech innovations to a farm crowdy. I know Small Foundation has one intervention with African Leadership Academy, where they have a network of their alumni and the agripreneurs coming from it, and other agribusiness corporates, and trying in some way to create that collaboration, which is another way of feeding into the advocacy and where it can be the collaboration. I know, Nick, we haven't met yet, but we're talking to Aceli, who's linked to CSAP, another network. So there's a lot around this kind of network approach where collaboration can come to bring the right people into the room to really push the advocacy that's needed. Thanks.
Thank you, Jared. So Nick, I guess we're going to look to you to probably coordinate, some pet project around this. I feel once we find some model that works, that can be expanded on, it can be built, into some proprietary service that we can then get collaborators to come in, and then we can push through whatever channels, we're having businesses.
Absolutely. And if I may, basically, we just so everyone knows, this is the third event in the series. We'll have one more this year, but at the end of this year, we'll be putting out a survey on particular areas that participants so far would like to look at in future events. So if you want education in this space, training, and that particular topic to feature, you'll have your chance to have your say, and we can schedule that as a major focus for the series going forward. So just wanted to make sure that everyone knows that that's coming soon.
Thank you very much, Nick. Thanks to Christabel and Siani. They've made some good comments in the chat segment. Thank you. Everyone's can reach through and see how they've weighed in this conversation around advocacy. Next, we're going to try to touch on environment and the ease of doing business. Ease of doing business now of farm operations. As it were, I know there are different shapes and sizes and types and colors for these kind of operations. But I guess this is just another, say, 5-10 minutes for participants on this roundtable to just talk us through some of those innovative off-farm operations going on, and how the environment, has been conditioned to make it easy for participants to get, their stuff done. I see Epi's hand up for this or for the previous one. Epi, your hand's up.
Yeah, good evening, and thank you very much again. Hello?
Yes, Epi, are you responding?
Yes, I said good evening, and thank you very much once again for the opportunity.
You're welcome.
Yes, I just said let me introduce and see what I'm doing so that we could see how we can leverage and see how we improve on the lives of our farmers. We are an agri-tech, web and mobile agri-tech that we are leveraging on technology, bringing all the stakeholders in one market system to improve on quality and quantity of Cameroon cocoa, and to see how we can integrate their farms, because most of the farmers we work with, they are based only on cocoa, and it impoverishes them at the end of the season. They have nothing to hold on to. So we are trying to bring innovation in the system where we can put them in on insurance schemes and see how they can finally get some few benefits from their process of their cocoa. So we are looking for partnerships in that aspect so that we really improve on the farmers, because for now we have about 4,200 farmers on the platform, about 40 cooperatives that are spread in the part of the southwest region of Cameroon. So I'm the founder and the CEO of the company, and we're looking to get partnerships in the aspect of technology and some other aspects to see how we can improve on the lives of the farmers.
All right, Epi, if I may ask, your solution, is it a marketplace? Does it bring together, an aggregation of what these cocoa farmers have, and processors then buy from there? You care to share a bit?
Yes, that is what we are trying to build now with a partnership I got from the US to build a marketplace. But for the start, we did not think of bringing a marketplace. We just thought the farmers would come together and we see how we can train, because we do trainings at all levels of the cocoa production. And after the training, we sorted that we could not leave them at the level of training. We could get a good market to sell the cocoa so that the farmers too can make a margin. So from there now, we came up with the idea of building the marketplace. So as we talk now, the marketplace is being built and probably will be up by the end of next week, where we'll have aggregators coming now to see how they can, their own things that they can bring into the system.
All right, thank you very much, Epi. That's just Epi they're selling straight up to us their solution in Cameroon around cocoa value chain specifically. Does anyone want to weigh in on, ease of doing business? We are on the environment focus about now for off-farm innovation. What is expected for conducive environment? What exists in your own environment now that's working for you that others can try to model around? Does anyone want to take this away?
Yes, let me just add some few things, some few take homes. We have as plan to see how we can transform the cocoa shells into biofertilizer, so that we'll plow back to the farmers because they don't have the means to get fertilizers. We are trying to see how we can transform the cocoa pulps into juice, because that one too, the pulps too are left in the bush as waste and is very nutritional. So I think at that level, if we have even somebody at that level too, will be welcomed.
All right, thank you, AP. That is noted. Does anyone else want to weigh in on the environmental aspect of, off-farm innovation?
Charlotte, if I may, just a very quick one. It's more of it's a question back actually, perhaps unhelpfully. But I was curious to know, because I've seen in Kenya and other places in other sectors, in this context, biomedical, imports, exports, the policy change was quite quick and quite effective to facilitate imports in Kenya, in the context of COVID, sorry, I should mention. And I just wonder whether or not anyone has any experience of or insight of how COVID, the pandemic, stresses, trials, issues, challenges around import, export in particular, and that kind of business environment, whether or not we've seen any changes as a result of the pandemic, or is it a case that it's persistent historic challenges remain? I don't know what the experience is in other parts of Africa.
Thanks, Nick. Anyone wants to respond to that?
Can I just chip in here? I think COVID really has not affected the smallholder farmers to a large extent, or to any farmers. Because if you really look at the way, we do our farming in, and I'm referring to Kenya, is that because it's very seasonal, and the farmer has to plant when it is necessary, when the rains are about to start, and when the crop is ready, they have to harvest it. So generally, I think, for the farmer, the cycle has continued. For the COVID cycle has not really changed their lifestyle or the way they do things. What might have changed a little is the bringing the product to the market, and how do you bring the product to the market? So what Epi was saying is maybe quite important, is to see if we can use if somebody has found that sort of mechanism to bring the product to the market. I'm not really good at it. I'm not really researched it at all. I don't know, somebody like Christabel might have some ideas as to what they were doing when we had a pandemic and people had problems in getting to one part of the country to another part. But the good thing about Kenya was there was no lockdown as such. There was a curfew all the time. So what happened was some counties were locked down for a couple of months because of high incidences. Otherwise, but other than that, movement was very free across the whole country. So I'm not sure which part of agri-tech would have helped the farmers to bring their product to market.
Thank you, Ashok. Christabel, do you want to weigh in quickly?
I think that's a hard question. When I look at the SMEs for whom they're benefiting from ASELI, I think the biggest challenge that COVID did have, whether that's in Kenya or any other African market, was it was now difficult for farmers to actually get access to markets. I think there was some research done, if I'm not wrong, by either 60 Decibels of one of the other research firms, showing that even people going to the market, there was initially, when there was a lot that was unknown about COVID, initially people were even scared to go to the market and then to purchase produce. So I think there was a lot of produce that just went to waste. Markets were a little bit disoriented. I think to that end, whereas there's probably some parts of the access to market component that was solved by agri-tech, I think that was largely in urban areas. People were ordering, you could see the numbers shoot up a little bit more in e-commerce platforms. And I guess in the case in Nairobi, for example, markets that were closer to a place, cities like Nairobi, the major cities, Nairobi, Mombasa, Eldoret, etc., you were seeing an increase in e-commerce platforms. But I think the role that tech could really play in organizing rural markets, I'm not so sure that we saw a huge change in rural markets during COVID, because the end users, or rather the consumers in rural markets, don't actually engage in the same way that we do in urban or peri-urban markets, where now people shifted to online platforms. So in some ways, I think I'm agreeing with Ashok a little bit that I'm not sure what role tech could have played in reorganizing markets, particularly for rural populations or the rural consumer. But we did see a shift in consumer behavior in agriculture, in urban and peri-urban markets, even in the ag sector itself. And I think that ties back to a point that was made in the earlier part of this conversation, when someone was saying, tech is important, but tech doesn't solve everything. There's a need for human interaction. And I think we would see that largely, especially in rural markets. Yeah.
Thank you very much. Thank you. Paul, your hand's up.
Yeah, thanks, Shola. Just a quick observation to add to what's been said. I think we probably saw a complete disruption of supply chains for big and small farmers. For the big ones, access to overseas markets was restricted or disrupted completely. For example, floriculture in Kenya. For smallholders in most countries that I've got contacts or friends in, there was because of the reduction in the tourist market and the closure of hotels, small farmers who were servicing hotels who like to buy locally sourced produce, their demand was completely taken away. But the winners were those who were able to pivot to a digital channel and to replace the the larger corporate consumer of their produce and access individual customers. And because there was a big need for those who were in lockdown to have deliveries of goods. And some communities were able to get together and do that on a bulk buying basis. And that kept some small planters in business. But the digitalization of the relationship was essential in order to make it efficient. And that's just something that I've seen from where I'm based in Mauritius. Thank you.
Thank you very much, Paul. And thank you for everyone who weighed in on that point. Next, we'll try to touch on the economy, government policies, private sector participation. What are the sort of conversations we should be looking to push? What are the conversations you're pushing currently in your sphere of operations that could then aid, how someone else goes about trying to advance conversations around off-farm? I know when the panelists were speaking, someone had spoken to, profiling and how, KYC issues for smallholder farmers, for example, ought to be structured differently, pricing, for debts and the likes. But generally, the economics of this whole system, what conversations should we be engaging in with the government in terms of policies and the private sector in terms of participation? I'll kick off with government policies with respect to how curriculums in school are being designed particularly for agribusiness. I was speaking on a roundtable with the Pan Atlantic University, here in Nigeria, on how to strengthen, curriculum at the universities. Nick spoke a bit about it, is embedding a bit of business into what we have as agriculture. And we're hoping at the government level, certain policies will favor, for Nigeria particularly, certain policies will favor people who choose to go to the universities to study agribusiness, because after all, agriculture is, the next thing we're looking onto now. And so those conversations are at very early stages to see how agriculture curriculums can be rebuilt, the nomenclature for the courses as well being reviewed to become full-blown, agribusiness curriculums, and to probably also have, anyone looking to study these courses gain first-hand access, to scholarships, to just make us have a lot more young people taking more interest in agriculture or in agribusiness, as it were. That will be, a comment from me on government policies. that we've started conversations around. And we're not there yet, but those conversations have started. Does anyone want to go on this with respect to government policies and private sector participation to advance, off-farm operations and financing? Does anyone want to give a go at this? I'm sorry, I did not pick the name of the economists we have in the room. But then, Christabel, were you going to speak?
Yeah, sure. I was just going to, I think, draw attention back to the point I was making earlier around maybe two roles that we see government could play. One is on looking at how public money can actually unlock private sector funding in order to then drive innovation. I think that's one role that I won't go into detail now because we did talk about it earlier, but looking at the role that public finance can play in unlocking private money. I think based on the Maputo Declaration, the goal for governments was to at least get to 10% of the budget going towards agriculture, but we are not seeing that happening. So there's still a huge role that I think government can play. The second one, I think, is looking at government institution or regulatory bodies. One of the studies that we're currently undertaking, and we hope to release a white paper soon, is looking at how central bank policies either enable or discourage lending in the agriculture sector. So I'm not a banker or a finance person, but I think just one of the things that I've been learning is if you look at things like the credit adequacy ratios, for example, they tend to be higher in sectors that are deemed to be risky, like agriculture. So again, banks in some ways are actually really tied by the requirements that are imposed on them by central banks. If you look at global standards around that govern banking regulations, they're not actually the same. Look at Basel III requirements, for example, and then you look at the standards that we apply in most African markets. It's actually a lot more stringent in African markets than in the global setting. So we're starting to look at that research to just understand what is a role that central banks can actually play in laying out policies that enable lending, specifically in the agri-finance sector. And so in summary to your question, Shola, I think one is looking at the role that public funding can play in unlocking private finance, and then two, looking at the role that regulatory bodies can play in unlocking finance that I guess can then be focused on innovation. And we hope to be able to release that white paper relatively soon. So something you can look out for.
Thank you very much, Christabel. Thank you very much. Quite insightful. I mean, home run about now. And I'd like us to just speak to the issue of financing is, a recurrent decimal, but that in this part of the world, I'll speak about West Africa. Recouping finances, investments, finances invested in whether on or off farm, projects and exercises have been characterized by, a high rate of default. And, most of the organizations advancing these loans have such non-performing loan ratios that doesn't make it healthy for their business. They keep saying, look, agriculture needs to be de-risked at a level where available funds can then continue to go, into the operations of whether on or off-farm projects and operations. Do we have anyone in the room, or do we have ideas in the room on how default has been managed, whether through the use of tech, what accountability structures have been deployed that you're aware of, that has, contributed or aided, let's say a marginally lower, non-performing loan ratio that you've seen, that others, might then start looking to adopt? Does anyone want to take a go at that? Defaults, combating defaults on, on loans for off-farm operations or activities as well. All right, I'll talk about one practice that I've seen that I think has pretty much worked, and I feel this takes us to that last point of equity in the breakdown of how we're going to address this roundtable. Equity in terms of all stakeholders being held accountable, in their involvement and their contribution, to off-farm operations and financing, as it were. We as FarmCardio have gotten into transactions and projects where accountability was a huge issue. We've learned from those experiences, and we've also played with some other models where farmers had to cross-guarantee one another within the cooperatives, and it was a standard procedure for us. We will not aggregate farmers who do not belong to a recognized cooperative. It always started from them, but at that, a few of them were still notorious, and we then got each smallholder farmer to then start looking at how they could cross-guarantee one another. And we found that this helped with accountability to some extent, because now at their level, at the level of the smallholder farmer, you could see how if you work side by side, me, it's easy for me to check what you do. And some of them were reporting, unethical behavior that was going to lead to a loss in whatever financing has been put in that business early enough, for those things to be addressed. So I'll say cross-guaranteeing across value chain participants and stakeholders, especially smallholder farmers, would go a long way in helping reduce the ratio of non-performing loans. I mean, that will be one that I've seen work. But then, does anyone have any other? We're hitting the home run now before we hand it over to Nick, to wrap this up. But does anyone want to weigh in? Ashok?
So what we have seen is that the model that we are working with, and which is very good for the farmers, is the aggregator model. Because the aggregator is there to support the farmer by supplying the inputs and maybe charging them an interest. Hillary had talked earlier on about the interest rate cap and so on. But I think for the aggregators, they can charge, they don't have a cap that is there on the interest rate. So what happens is that the farmer's best way of getting finance is to be able to join an aggregator, and then the aggregator will supply them not only with the input, but they will also provide them other services like agro services, giving them details about planting, etc., and so on. So that is one area. The big problem I think that a farmer faces is the marketing their product. And when the crop is harvested, they have to market it because the storage is limited. Now, if there was a way of storage being put in for the farmers, especially say for potatoes and potato farmers and potatoes farmers, then what would happen is that the farmer doesn't have to bring all the potatoes to the market. They can keep it in the storage, and over the next 2-3 months have it released. So that would require what we would call a warehouse mechanism and a warehouse receipting process. Is something that we need to look at and put in place.
Thank you very much, Ashok. And the aggregator model, no doubt. Akindele, do you just want to speak in 2 to 3 minutes about the aggregation centers being deployed by FarmKaraji, which speaks to what Ashok has said around helping smallholder farmers with market access, and then more importantly helping them with storage to reduce post-harvest losses. In FarmKaraji state, what are the aggregations being able to achieve?
Okay, thank you, Shola. So what we've done is to set up aggregation centers, which is like the last mile to the farming communities. And those centers enabled us to do is provide both input and also after crop production harvest. So we have our ambassadors, and these kind of aggregation centers, it's almost like the size of a cargo of a container that are used for an export activity. So it's that kind of small size, sometimes a room, sometimes a container itself. And then we have ambassadors in these locations. And so for the input side, we are at one end at pre-negotiated discounted price for input, such that the farmers in these communities can buy inputs through us at a price lower than they will have obtained it, even if they were as a working customer, or even they went in as a batch of 100 farmers, because we are going to use numbers to get that. And at the end of the day, also on the aggregation side for harvested commodities, once we have the checklist or the shopping list of, say, a processing organization, right? We, through ambassadors, contact to confirm what communities have produced this particular commodity. And once we confirm that, then our ambassadors also informs us of the estimated quantities available. Once it's a yes, I'll get a sample to the processor and they accept the sample sent in terms of moisture and all other things they're looking out, then our job is to now aggregate from these farmers. When it's in a sizable volume in the aggregation centers, then we send through partners trucks to pick them up and we deliver. So aggregation centers have enabled us to do 2 things: input side and provide input, sell inputs rather, and also harvested commodity side, aggregate through the farmers. And interestingly, the farmer is able to save cost by buying inputs through us. He's also able to get better returns for his harvest, because rather than sell to intermediary layers of middlemen, you're almost selling directly now to the final consumer, which is the processing organization. So, because previously, the middleman to him pays him peanuts, but goes to the city and charges so much as 100%, 200%, and makes a lot of money. But the farmer, because of the fact that he doesn't want to be exposed to post-harvest losses, had no choice than to sell to this particular middleman. So we've kind of collapsed that and made it more seamless and get better value for the smallholder farmer. Thanks, Shola.
Thank you, Akindele, for weighing in. Thank you very much. And for everyone who has responded, stayed in, on this call all through, thank you very much. I'm going to hand it over to Nick at this point.
Yeah, thank you, Shola. Thank you very much indeed for chairing that. Really fascinating discussion. I'm glad that we were able to have so many people stick around and so many good contributions. So thanks especially to those who spoke and who left comments in the chat. The whole point of the Agritech Development Forum is for this kind of discussion. We don't just want to talk at people, we want to facilitate conversation, discussion amongst people as well. So that's what this is all about. And I implore you, encourage you to continue the conversations either on BOBAB, you're able to do that with various chat functions, follow the projects, reach out to people, or indeed on other platforms as well. The most important thing is that you connect, that you continue conversations after this. I'm happy to say that we'll be continuing the conversation with one more event in the Africa Agritech Development Forum this year. As I mentioned, we were really happy to announce we got some funding from Small Foundation to continue the program into next year. But for this year, we have one more event taking place in November entitled Supporting Agricultural Innovation and Food Manufacturing with Effective Trade and industrial policy. So lots of the topics around policy that were touched on today, we'll be digging into deeper during that event. So if you haven't already done so, I again encourage you to sign up, and we would love to see you there. And yeah, that's it from me. Other than to say thank you once again to all the speakers. Thanks again to Farm Crowdy, Shola in particular for taking the time to contribute. And that's it. Thanks very much.
Thanks, everyone.
See you, Nick.
Thank you, Ashok.
All right. Thanks for the invitation, and I was really happy to participate. What we'll do is once I'm back in Nairobi, we'll stay in touch.
Definitely. Thank you, and enjoy the rest of your holiday.
Thank you.